Let's cut across to our special show, Crystal Ball. Latha is sitting by. She is in conversation with Mark Mobius. Latha, over to you.
Thanks a lot for that, Sonia. Well, quite clearly, the emerging markets are seeing a turnaround in their fortunes. India, in particular, a 25% year-to-date performance in the Indian index, one of the best performing indices. And the person who would be best placed to speak about emerging markets in general and Indian markets in particular, Mark Mobius, Executive Chairman, Templeton Emerging Markets Fund, is my guest on Crystal Ball today. Good morning, Mark. Thank you very much for joining us. We haven't spoken to you after some momentous events that have happened in India, a landslide victory for Narendra Modi and the NDA, as well a big jump in the indices. Well, let me start with that question, which almost everyone in India who's interested in equities will want to hear from a guru like you. Indian markets have run up a lot to discount the good political news. What kind of gains do you see over the next 12 or 24 months? Do you think this good run can continue?
Yes, I think we can see a continuing bull market in India. Of course, there will be corrections along the way. These days, volatility, as you know, is high all over the world, and you can expect corrections of 10, 15 or so %. And a lot will depend on the number of new issues coming into the market in India, which probably there will be many. Also, it will depend on what reforms the government imposes, which allows foreigners to come in with more money. So a lot of factors are at work here, but I would say the obvious trend is that we are in a bull market in India, and that will continue.
All right. Well, I would want from you some kind of milestones or returns that you are expecting from equities. But before I delve more into Indian markets itself, about emerging markets, investors in emerging markets had a fairly decent run over the past 10 years. I understand they've underperformed only in 3 of the last 10 years. But 2013 was a nasty jar. Emerging markets performing much worse than developed markets. Do you think 2014 will be different? 15 will be different? Do you see EMs once again becoming outperformers?
Yes, I believe 14 is already different. As you know, emerging market is beginning to outperform the developed countries again. And I think 2015 will be more of the same. Emerging markets have a lot going for them. They have high growth, they have low debt, low government debt to GDP, and you have an incredible increase in foreign reserves. More importantly, the banks are full of money. If you look at the commercial banks in the U.S., in Europe, in Japan, and China, they have an awful lot of money on their balance sheets ready to be invested because the loan-to-deposit ratio of the banks has been going down, not up. So we see a very bullish environment for emerging markets generally and for India in particular.
Okay. Nevertheless, developed markets have given investors very decent returns. The S&P 500, the DJIA are all at lifetime highs. So do you think incremental money will still come the emerging markets way? We've only seen now perhaps year-to-date ETF money becoming positive for emerging markets. Until now it was actually negative.
That's right. ETF money, of course, is dependent upon what the index does. And if you see outperformance of the U.S. against emerging markets, of course, the flows will go into the U.S. Of course, what happened in the last year and the year before was this talk about tapering, which frightened the fixed income investors in emerging market bonds. And that had a lap-on effect onto the currencies because emerging market currencies, like you saw in India, declined and did not perform well. So that caused an exit of equity money as well as fixed income money out of emerging markets. But again, you have to be very specific. If you look at the Indian market, during the time when the Indian rupee was devaluing, Tata Consultancy went up in U.S. dollar terms because they benefited from a weak local currency, and of course U.S. dollar was their earnings point.
Okay. Actually, those jitters that you referred to because of tapering, do you think they are genuinely behind us? Because there continue to resurface fears about the flows into emerging markets when the Fed actually raises rates. When do you see a rise in rates coming in the United States? What impact might that have in calendar 2015 on emerging market flows?
Of course, nobody knows exactly when rates will move up, but we know that eventually there will be changes in rates, but it can happen over a very long time period. What we're seeing now, of course, is that the Fed in the U.S. is buying back less and less. So the tapering, of course, is ongoing. But don't forget, what is already in the system is remaining. And that's the reason why I mentioned loan-to-deposit ratios in banks is still very low, which means they are loaded with a lot of cash that the Fed has pumped in over this period. And it's not only the U.S., it's Japan, it's European Union, it's China, and many other areas of the world. So there's an awful lot of liquidity out there still waiting, lots of ammunition in the system. So we expect this bullish environment to remain in place for quite some time. Nobody, of course, can predict when it will end, but at the current juncture, we think we're in a sweet spot.
Okay. Well, Indian markets got a goodish bit of this money. We've got over $11 billion in this year itself. Do you think the rest of the year, this kind of a performance can be repeated? And 2015, what kind of flows do you think are waiting to come?
The flows actually could double from what we've seen so far if, and this is the big if the government changes the rules regarding limitations on how much foreigners can buy of companies. That's one. And also if the government changes the rules as regards to institutional investors having to reveal their underlying shareholders, which is very difficult for these institutions. Those two reforms and changes could make a world of difference. One of the things that would do, of course, would be to force an increase in the weighting of the indices for India. And, of course, an increase in weighting of the various emerging market indices would, again, force the various index funds, the ETFs, to increase their weightings in India. And so that could cause a big flow of money going into India.
Okay. You know, I take your point that the FII limits are getting hit in a lot of Indian companies. Many of them are actually, you know, public limited, privately held companies, not government companies. But, you know, the government is likely to supply a lot of paper from its own basket. You know, the divestment, the disinvestment in public sector companies. Will that find appetite among foreign investors, or will that soak appetite and actually be negative for listed stocks?
That's a very good point, because you're going to see two forces at work. One, new money coming into the market if those changes I mentioned take place, and at the same time more shares coming into the market. More IPOs, privatization, the government issuing more shares of current government-owned companies. So there's a balancing effect here, and nobody knows which side will be stronger. My guess, however, is that if these reforms take place and continue, you'll see much more money coming into the market before it can be absorbed by these new issues.
Okay. Well, you spoke about two specific reforms, you know, a little bit of dilution on the KYC norms, as we call it, you know, revealing your ultimate investors, as well as increasing FII limits. What other reforms are you expecting from the Modi government? When you say reforms and government performance, what are the minimum expectations?
Well, the minimum expectations are now beginning to be felt, and that is making government more efficient and faster in approvals for various licensing. It's interesting that the Modi government has put a lot of the licensing procedures online and also given the government departments time limits as to when they should be approving or disapproving various licenses. This can go a very long way to give confidence to the foreign investors.
Okay, one more, kind of emerging market question. Where would India figure in your pecking order of emerging markets? What is your pecking order?
Well, right now, China is at the top because China is also going through a lot of very significant reforms. But longer term, India has got to be at the top of the list simply because of the population age structure. India has a very regular pyramid-shaped structure where there are lots of young people coming into the workforce. That means that going forward, India has the potential to outpace China in terms of rates of growth. Of course, China cannot continue very, very high growth rates because the base of the economy is so large. India is just beginning that process. So double-digit growth rates in India are certainly possible, and we look forward to seeing that.
Okay. It's tempting to ask you, therefore, what kind of index performance you expect over the next 12, 24, 36 months. You stuck your neck out about flows that could even double in the remaining part of 2014. What would you say about index levels? You pick your time, 12, 24 months, 36 months. What kind of gains can you get either on the Sensex or the Nifty?
Nobody can predict what the market is going to do from month to month, year to year, and so forth. All we can say is that we are in a bullish environment, and increases of 20, 30, 40% are not out of the question because of these changes that are taking place. But I can't give you a specific number. I don't want to mislead your viewers, but I would say we are in a very good spot to be in the Indian market.
Well, you did speak about China recently, and you said that another 20% gain can be possible in that market. Would you say India could even outperform that number?
Yes, it's quite possible. No guarantees, of course, but given the changes, and of course, if these changes are accelerated by the Modi government, then you can see an incredible performance.
All right. Well, now let me get to the sectoral preferences that you would have. Mark, unlike so many others in 2013 in particular, who went to defensives, went to infotech stocks after their brilliant performance, you have always been keeping your faith in Indian cyclicals. What would your asset allocation within India be in terms of sectors over the next 12 months?
Well, in terms of sectors, I would say information technology would be very, very important because it gives us some downside protection while at the same time being in a growth industry that is going to be doing well, not only in India but globally. So that would be one sector. The other sectors would be related to consumers. If we can see some good consumer stocks that are growing at the pace that they have been growing in the past, we would want to put money into those types of stocks because per capita incomes are going up in India, and with reforms which are impacting distribution of food products, we can see lots of upside in that area. Then we can turn to pharmaceuticals. As you know, the Indian companies are first rate in the pharmaceutical world. They've done very, very well. Some of them are overpriced, but the sector itself is a very promising one, and one that we would want to focus on as well.
Okay. Well, I notice you're not saying much about the cyclicals. Some of your funds have as much as a 25% stake or 25% of the money in banks. How would you look at the finance space? Do you like only private sector banks? Would you give public sector banks now greater attention simply because Mr. Narendra Modi has a record of doing very well with public sector units in his home state?
Yes. Of course, the banks are in the view of our analysts, and we're looking at that very, very carefully. Higher interest rates, of course, could be beneficial for the banks, and if we're expecting higher interest rates, then, of course, we would want to be in the banks, both public and private sector banks. If the privatization program moves ahead and the government decides to issue more of the bank shares that they're holding, this could also be bullish because of course, the investment banks will be promoting these banks and giving more and more information of their strengths. So I would say yes, banks are within our purview.
Okay. You spoke about consumer staples. We just got results from Hindustan Unilever. The volumes actually were better than what the street expected. But a lot of people think that the valuations are very rich. In the consumer staples space, would your eye be on these big boys, ITC, HUL, or would your eye be on the middle cap companies?
Yes, it's true that some of the big boys are very expensive. That's the reason why we hold Unilever in London rather than Hindustan Lever, because the valuations for the parent are much better than for the child. Some of the second-level companies are interesting, but we are concerned about corporate governance in some of those companies, so we have to look at that very carefully. Some of the family-owned companies differ in terms of their corporate governance, and we have to be cautious.